Well, GameStop is in the news once again. You might recall the former meme stock during COVID. And this time the company is looking to acquire a much larger company by the name of eBay. You might recall that company. And there's a couple, I think, really important points I'd like to address here. One is potentially what might be the path of least resistance, either for GameStop or for eBay, the stock. And second of all, a bit of perspective of what's going on here. So first of all, let's start with a little bit of perspective. In terms of what's going on, we're talking about an M&A deal. So GameStop, which is a much smaller company from a market cap perspective, and this market cap might be outdated a little bit. We're talking about $11 billion of market cap. If you compare this to eBay, which at the time here, and again, this might be off and it might not be perfect, but I thought it's north of 50, maybe 55, 56 billion dollars in the market cap, or maybe that was the premium they're looking to pay. It doesn't really matter. The point is, a much smaller company looking to buy a much larger company. Now GameStop does have some cash on the balance sheet, and they will have to certainly raise quite a bit of money. Now, it's not unheard of for a much smaller company to buy a much larger company. There's plenty of precedents of this, but it is also something that could take a bit more time. That's number one. Number two, or maybe the second part of number one, is just to understand that if we're looking at this from a how do we make money from this, the question is always, do I now buy GameStop the stock or eBay or whatever? I want to just let you know, and this has come a bit lost because we live in this retail sort of gambling frenzy for the past number of years in the markets. There are some very sophisticated funds, in fact many of them, hedge funds and other institutional players that are playing something called M&A arbitrage, right? So merger arbitrage. It's a sophisticated strategy. It takes plenty of variables. I've run it myself. I've been intricately following such strategies for the better part of the past, probably at this point, 20 years. And so there's a lot of variables that go into this. So it's not as simple as just buying that stock and selling that stock. There is a lot of variables. So that's just to give you a better perspective. Thirdly, or I guess the second part now, keep getting lost in the numbers, is just understanding that the news flow can come from all over the place. So if you're looking at a company, like in this case GameStop, that's actively involved, looking at either negotiate with eBay to buy it, or literally doing some sort of a hostile takeover kind of thing where GameStop might directly go to the shareholders of eBay, the news flow doesn't have to, but can get very crazy. In other words, if I were to just buy the stock here or short the other stock or vice versa, the news flow can very quickly sort of, kill us. My typical approach to something like this is to really take a step back and let this play out. However, if I really must do something, the only way I would be by a pure momentum-based approach. So the initial reaction as I'm recording this, the initial reaction it was the 4th of May when the news broke, is essentially eBay, the stock rallied about 5% on that day. The only way I have ever found from a pure price action perspective to make any money from this kind of thing is purely from a momentum perspective, as I just said. So basically what that means is you can see eBay here, we have a momentum indicator called a TSD Trender momentum indicator. You can see it gave us a buy signal on the 1st of April that remains valid. As long as that signal remains valid, I can essentially be long the stock. If that were ever to flip to the downside, I would get out. Same thing for GameStop. The ticker symbol here, of course, is GME. You can see we've had and continue to have a momentum buy signal. We don't yet have a new momentum sell signal, but that can happen very quickly. So merger arbitrage is not such a simple strategy. I think what's going on here is something that we need to respect through the lens of understanding that there's plenty of players involved that are looking to profit from something like this. My sort of suggestion, I can't give you advice here, but my suggestion through the lens of education is to use a pure momentum-based approach, but smaller size. Smaller size because you don't know about the news flow. The news flow can come out of nowhere. So I would be very careful with that. With that, hope to have given you a little bit of perspective on M&A, or in this case, merger arbitrage, at a very, very simple level. eBay and GameStop, in other words, GameStop looking to buy eBay, is the latest one. Hope it helps. And any comments, please let us know.